This week, GameStop made headlines as it got caught in the middle of a fight between billion-dollar hedge funds and Reddit users, causing its stock price to surge 2,500% in just a few weeks. If you'd put £1,000 in GameStop at the start of the year and sold during its highs, you would have made about 25 grand. GameStop is a video games and electronics store based in the US, and since around 2016 it has really been struggling. Understandably so, as game streaming gradually renders physical disc games obsolete. This led several hedge funds or big professional investors to bet against the share price, also known as shorting the stock. When someone shorts a stock, they effectively borrow it from its owner and sell it immediately, so that they can buy it at a later date when they hope to buy it cheaper to give it back to its owner. For example, you might borrow your friend's watch and agree to give it back at the end of the month. You then sell it immediately on the market because you know you can get about £1,000 for it, say. Then, at the end of the month, you need to give the watch back, so you buy it on the market, except now it's gone down in price, so you buy it for £500. You cash the profits, and you give the watch back to your friend. So this is exactly what some hedge funds did, except they were shorting the GameStop shares. Next was the short squeeze. So this is what happens when the price actually rises, causing the shorters of the stock to lose money. And when they buy in at this higher price, in such large volumes, it actually causes the price to rise even more. So a group of Reddit readers pushed the stock up by shouting loudly about it and egging each other on. And they did this partly for the fun of it, partly to make profit, but mostly to mess with the hedge funds. After all, why should some billion-dollar bigwigs profit from taking down a struggling small company? After a surge in its price, trading platforms like Robinhood placed restrictions on trading the stock, which mostly affected retail investors. This is the Reddit users and normal people, and this sent the shares tumbling. Seems rather unfair. The hedge funds that were betting against the stock can trade how they like, while the Redditors desperately trying to save the company get shut down. It seems like another example of the big guy always winning. So these brokers were claiming to protect the retail investor from huge losses due to the volatility, and at the same time they were protecting themselves as they don't have enough funding to cover the clearances. Also, it has to be said that there's an element of market manipulation here on both sides. Someone with a big influence has to be careful what they say about a stock, as they can unfairly impact the price. When Elon Musk tweeted about potentially taking Tesla private in 2018, he got into trouble with the SEC for manipulating the share price and causing some market volatility. Oh, and guess what? He got involved in GameStop tweeting GameStonk, which some people are saying caused a massive surge in its share price. So over the coming weeks or months, we are likely to see the share price of GameStop come crashing down, as they are a terrible company when you look at the fundamentals. It's had declining earnings for years, even before COVID, and in 2018 and 2019, it lost more money than it made in the previous 4 years. On a positive note though, and probably my favourite thing that happened in the GameStop debacle, was the Robinhood Society of Nottingham, a group that follows the English heroic outlaw, famous for his archery, received over 33,000 new Twitter followers, up from their 400. Thanks a lot for watching. Be sure to check out my next video, which is going to be on Tesla and why it is ridiculously overpriced, even after its 10% drop this week. See you soon.